email stuff here. But he was on here just briefly. So take about 2 or 3 minutes, and as soon as I get him to appear on here, then we're going to get him talking about his content here. His company is called Making Ends Meet, and here's an agenda that he's going to follow closely. I've got about 20 of these maybe, so you can pass these around. You might have to share them amongst the tables there. Okay, so take a couple of seconds. Let me get right back into getting him squared away. Okay, Chris, are you there?
I'm here. Can you hear me?
I can hear you, but can't see you yet. Let me get to Skype here. Okay, there you are.
Okay, are you projecting me onto the wall or something?
Okay, let's put you. Whoops. Okay, now can everybody in the back hear him as he's going to start speaking? Just let me know. Is this the speaker here? All right, Chris, take it away, please.
Okay. Hello? How y'all doing? Can you hear me all right?
Can everybody hear in the back? Okay, good. They can all hear you.
Oh, great. Okay. Well, I want to thank you for having me as your guest today. I attended a NARPM luncheon a year ago October, and really enjoyed it. And I kind of wish I was there with you. I don't kind of wish. I do wish I was there with you in person, because I remember the people were so nice and the food was so good. But I guess this is the next best thing. Let's see, Randy. Um, I have that outline put together. Everybody's got that, and by the way, you're looking at a hard copy printout of it, but there's also a PDF version that I'm hoping that we'll be able to share with you. And in the PDF version, there are hyperlinks in there that will give you more information for follow-up, because I consider that what's happening right now is that we're just this is kind of introduction. When Randy and I started interacting, it took a full year, I think, between when we first started talking and when he finally decided to take action on his situation. And I feel that this is a similar situation. So I consider that what we're doing right now is just saying hello, introducing to each other, and I'm providing you with that sheet with the hyperlinks for follow-up. And accounting, I was listening to your introduction, and it talked about ethics, NARPM ethics, and how part of observed or honoring the ethics rules of NARPM is to avoid getting too specific about pricing and that sort of thing. And so in this presentation, I deal with delicate, confidential information all the time. And when I don't usually, this is my first Skype experience, so pardon me if I'm a little clumsy. And hey, Snickers, stop! This is my dog. This is my first Skype experience, and so pardon me if I'm a little bit clumsy, but in a public presentation like this, I have to walk a tightrope and be careful about what I disclose and what I don't disclose. So in that sheet that you're looking at, I have a PDF version of it, and there's a link in the bottom of the PDF version that enables you to ask me confidential questions afterwards, or anonymous questions rather. You don't even have to identify yourself. And for future follow-up. So I'm going to try to walk that tightrope today. I want to be ethical and be specific enough to impart valuable information to you, but general enough to remain ethical. Okay, so I'm gonna screen share here. See this? Can you see the talking points? Can you? Okay. So the first thing I wanted to talk about, well, before I dive into this, Randy, are you there? Can you hear me all right?
I'm here.
Okay. Let me ask you a question. Now that we have this outline in front of everybody, you and I were talking a few days ago, and you said, "Wow, Chris, that's some really amazing content." And I was telling you we were talking about the importance of emotional engagement, and I had some very emotional stories that I told you. Now that we have this in front of everybody in print, I did not include those emotional things that you said were great content in here. Would you like me to touch on that briefly before I dive into this outline?
I think that'll set the stage.
Well, okay. Well, if we skip down to the bottom here, the two big takeaways: good accounting is a matter of life and death. Okay. What I mean by that is I was telling Randy about a couple of suicide situations locally. One was a developer who built an amazing development. Who built an amazing development, but his accounting was out of control. In fact, I don't think he had any accounting at all. And the consequence is that he lost tens of millions of dollars in retirees' life savings, retirees in his community, and had trusted them with their life savings because they figured that they were investing in real estate. And real estate, of course, is by definition real. It's secure. So they figured it was a sure bet. They couldn't go wrong. Well, it did go wrong, and he lost over $50 million. And he became so despondent that he tried to commit suicide. And there was another local case about a bookkeeper who had fallen on hard times. She had medical problems. She'd run up medical bills on herself or her family, whatever. And she stole about $100,000 from her employer, and then committed suicide by torching her own house with her in it. And so both of these are examples of how good accounting really is a matter of life and death, because when it goes wrong, people do commit suicide. Also, murders are committed about money disputes, wars are fought. I mean, it really is a matter of life and death, and that's why I do what I do. It's why I've been doing this for 22 years, and it's as much of a calling as it is a job or a profession for me. So I hope, and I suppose, if you reflect on your own experience or your own familiarity with history or your own familiarity with the news, you can probably recall, you probably know somebody, or you know somebody who knows somebody who suffered a tragedy like that. So what I'm trying to do is avoid all those tragedies, and get on the bright side. But this work is not just about avoiding tragedies, however. It's about enjoying success, it's about thriving. So we want to get from the point of struggling or suffering to the point of thriving. And that is the path that Randy and I have been on for the past 1.5 years, I would say, so far. Would you, Randy?
I would, except for the murdering part and the
No, no,
suicide part.
no. We're on the path from struggling to thriving, and you've come a long way. Um, Anything you want to add to that, Randy, or anything I missed?
Well, the fact that property management could be very lucrative, or it may not be very lucrative, but you have to know the reasons why. And so I went through a period where I just didn't really understand where the money was coming and where it was going out, and it was really hard to understand all of that. Chris comes in and starts showing me some eye-opening bookkeeping measures and accounting measures that I thought, well, I put all my faith in the programs that we use in property management. That's not the whole story. So Chris comes along and helps us look at those programs, so that now we're looking at a new life in our business, essentially.
You're looking at what?
New life.
New
in
life.
Our business.
Great.
And we're looking at
Now I realize we're talking to a mixed crowd. We have both property managers and also the vendors who provide support services. But if we focus just on the property management company owners for a moment, could you tell them the different? You're using Appfolio now. You've been using that since what, 2013?
Yes.
Okay, and then before that, what did you use?
Is that all the property managers? Are you aware of Appfolio? Okay. Before that, I had Propertyware. Before that, I had Buildium. Before that, I had Popman. Before that, I had Property something. Pro. Yeah. I had about 6 or 8 different programs because I thought by switching programs that would set me on the right path. But Chris showed me that wasn't entirely true.
And in looking back now, what would you say about all that? I mean, what's the big lesson?
The takeaway from me, the lesson was, it doesn't matter what program that you're in, you have to supersede that program by having eyes on your financial part of your business, the accounting part. Even if I'm not an accountant, that's no excuse that I still have to be aware as the business owner of the comings and goings of revenues and expenses and developing trends for the future.
Yeah, and we talked about how, well, can you hear me all right?
Yes.
Okay, the sound is getting weird on my end. We talked about, though, how, and I'll dive in a little bit into this outline now as first point, how there, in real estate and property management industries, there's a systemic bias against accounting or away from accounting, because the industries tend to attract people who score high on the DISC profile. And I pulled up an image of that. Can everybody see this? The DISC thing?
Yeah, it's up on the screen.
Okay. Yeah. So this is a model for characterizing personality styles, and it's a thing that's used a lot in the real estate industry to make hiring decisions. And we find that within the industry itself attracts people who score high on influence. They're outgoing, enthusiastic, optimistic. They're good salespeople. They're great people. Okay. And what they are not are these other three things. And you'll notice that the kind of people who tend to care about accounting and bookkeeping are on the on the opposite end of the circle over here. They're conscientious, analytical, reserved, precise, private, and systematic. Okay, so the industry is biased away from good accounting and bookkeeping because of the personality types that it attracts. Generally speaking, I personally happen to score high on B, C, and S, and zero on I. Zero I, not just low, zero. So, you might say that I was just thinking about this. Together, Randy and I, as a team, we constitute a complete person. Um, but this is why, if we come back to the outline, what I say, the real estate property management industries are biased away from accounting and bookkeeping because of the personality styles. Let's just to sum it up and say it this way: it has a tendency to attract likable people. That's the good news and the bad news. Um, so the strength is they're great at making deals. They're great at reckoning large transactions, but they're weak at handling the details. And you know the old saying, the devil tends to be in the details. And Randy and I talk a lot about, if you come back down come down here to the second point, reconciliation. Bank reconciliations prevent sand in the gears. So we discover these little things that make a big difference in your situation. Like if you're dealing with a landlord client and their owner statement, there's something a little off on their owner statement, even though the dollar amount might be less than $50 or less than even $10, or the point is it's not right. And when that happens, it rattles the client's trust in your overall accuracy. And there's that old idea that in order to be, we have to be faithful in the little things in order to be eligible for the bigger things. So when an owner statement isn't quite right, even though it might be a little thing, it rattles trust. It can create friction in the relationship, and to collectively, Randy and I have come to call that sand in the gears. So Randy's got a machine called Property Management Advisors, and I'm kind of like the mechanic or the technician who comes in. And this machine has gears in it, and I'm the guy who comes in, cleans the sand out of the gears so that they will turn smoothly, so Randy can grow a successful, profitable business. But people who score high I are disinclined to pay any attention to that sand. They're looking at the big picture. They're thinking about the big deals. They're focused on adding more doors. There's always more doors, right? You ever go to a property management industry gathering, that's the one question everybody's asking each other, right? How many doors? But if your accounting is not straight, more doors just means digging a deeper hole, as you can see down here. Or put another way, more money, more problems. That's you can look down this first point here about personality. People, they're top line, big picture people disinclined to be very interested in the very accounting that's necessary to run their businesses. If you hear this point about both industries are biased toward real estate expertise and away from accounting expertise, in order to own a property management company, there are certain legal requirements that you have to fill, and one is that you have to be a licensed real estate broker. Is that right, Randy?
Not in Virginia, but throughout the country, there's different states that have different rules.
Right. Well, what's striking to me is how, although in many states there are licensure requirements about real estate in order to own a property management company, there are no accounting licensure requirements. Yet, as soon as you become, as you see, look at this point, as soon as you become a property manager, you are all of a sudden a professional accountant, responsible for providing a complete set of financial statements for every landlord client you have. not just one. I mean, some accountants just have one client. Like if they work as a controller for a company, they're only responsible for keeping one set of books. If you're a property manager, you're responsible for keeping as many sets of books as you have landlord clients. That's a significant burden, and one of the things that I find in the industry, and this is what Randy and I call the elephant in the room, is that uh, people are they're not equipped at all. They have no preparation, they have no background, they have no training, and they have no inclination. And there are no rules or laws in the industry requiring property management owners to have accounting expertise. If there are rules, they're only requiring them to have real estate expertise and to comply with their ethics rules. But we talk about ethics. Most of ethics in business has to do with how you deal with money, right? And how are you going to make sure that you're dealing with money ethically? Well, you better have accounting expertise or accounting competence. And Randy and I talk a lot about one of the emotional things we talked about the other day was a lot of folks, because they are this way, their personality is high I on that disc profile. They'll say, "Well, that's not my strength. I'm a people person. I'm a deal maker. I will delegate that." So they'll hire somebody. They'll say, "I've got my guy or my gal. They do that for me." And then the whole burden goes on the shoulders of that guy or gal. And the dilemma is that the delegator, the property management company owner in this case, might not know what they're delegating. To them, it's a mystery. It's a black box. So they'll hire somebody and say, "Listen, here, you do it. I don't do that. It's like I don't do windows. I don't do that. You do it, and I will give you money, and you do it." And I told you the story about the bookkeeper who ran up her medical bills and wound up stealing money from her employer, and then committing suicide by torturing herself in her house. That's the kind of thing that can happen. And when accountants and bookkeepers make mistakes, not if, but when, it's very embarrassing, and they have a tendency not to admit it, and they have a tendency to try to, cover their tracks, and one thing leads to another, and a problem can accumulate, and this isn't because they're evil people, it's just because they're people, and there's a fear of reprisal. There's fear of being fired, and so I find as an economist, I'll come in to a situation, and I will discover mistakes that are made both by bookkeepers and even by CPAs, and I'll correct them, and I try to do it tactfully. I try to do it discreetly. But I'm just here to tell you to testify that it isn't enough just to hire somebody and assume they're going to do everything right. They won't, because they're human beings, and nobody knows everything. So it's helpful to have somebody like me come in and who's kind of out of the box. I'm not in the bookkeeping box. I'm not in the accounting box. I'm trained to be a CPA, but I just couldn't get excited about what CPAs do, so I took a different direction. But to have another set of eyes look occasionally, and because they might spot things that the people who are really close to the situation might be blind to, and Randy could tell you stories about how that's happened, in our situation. Let me pause and ask you, Randy, how much time do I have left, and what do you have to say about everything I've shared so far?
You have about 15 more minutes to go.
15? Okay, all right. Okay, so does anybody have any questions or comments so far? Any questions or any comments? So
thus far. Yes, John.
I can chime in. I had a very brilliant CPA who just seemed to have a mental block about Wall Street. And I was involved in some esoteric real estate transactions. And it's like his eyes would glaze over whenever I'm putting this stuff to him. And this guy was the tax manager for a major corporation. He was no dummy. But we just, you really do have to be careful. It's not about to have layers of oversight. We have a local bookkeeper, a CPA, and a tax attorney. And and plus I'm trained as you are. And so we have multiple layers of oversight that are questioning the numbers and looking at them. Now, one of the most valuable courses I had at school was financial statement analysis. I think that's what you're talking about. In the end, you look at the relationship between the numbers over time. If something looks like it's out of whack, you start asking questions. Why is it so high? Why is it so low? Why is the ratio off from previous quarters?
I heard most of that. Randy, I can hear you. I can hear you better than I'm echoing. Can you hear me, Randy?
Yes.
Okay. I can hear you better than I can hear him. I heard most of what he had to say. Thank you, by the way. And one of the things I heard you talk about was analyzing trends over time. And one of the things that's been striking to me, you know, whenever you use accounting software, it comes with built-in reports. But it's hard to know what you don't know. And one of the things that's been striking to me about some accounting software is that it internally it does not provide a way to run long-term trends. Like in AppFolio, you can't run a profit and loss by year. You can run a T12. You can see trends over the past 12 months, but you cannot see trends over the past 12 years. To do that, you have to export. You have to cobble it together. You have to run annual financial statements and then cobble them together in a spreadsheet if you want to examine annual trends. And QuickBooks will do that, but QuickBooks is not for running a property management company. Property management accounting is trust accounting, where you're keeping track of your other people's money, other people's equity. In the property management books, the property management company it appears basically as an expense item on those books called management fees, and there's some other kinds of fees that property management companies get paid. But the point is that the money that you are accounting for in property management books isn't your money; it's your landlord's money. It's trust accounting. So you need your own set of books where you can understand how your business is doing, where the management fee expense that appears in the property management books appears as income on your books, and then you account for your own expenses there. But I'm mentioning this because Randy's using QuickBooks online to do that, and one of the cool things that QuickBooks will do is let you look at annual trends for your own business. But if you want to look at annual trends, build annual trends for your landlord clients, AppFolio won't do it. AppFolio will only give you the T12. And one of the things that Randy and I have done is we've been put together annual trends analysis on select properties within his management portfolio as examples for him to present, to use for promotional purposes. You know, to show clients here's what a well-run, profitable property looks like, and here's what a poorly run, unprofitable property looks like. And the reason you would want to hire us, Mr. or Mrs. landlord is because we're here to, first of all, provide you, create this information for you so you can know how your properties are doing, and then help you manage wisely and help you manage well. But your point, sir, about the trend analysis is very, very important, and what astonishes me sometimes as a practitioner in economics and in accounting is that not all accounting software even has a report for that. You have to, you have to cobble it together sometimes outside the box, so to speak. Any other questions or comments so far?
Here's one. Yeah.
I may need you to repeat it, Randy.
Will do. Hey Chris, is there anything that you're up on, have some knowledge about with regard to the new tax code in our landlords as they begin to ask questions about that? They're going to expect us to be the experts, of course. So, is there anything? Have you gotten into all of that just yet?
The federal taxes.
Yes.
The Trump tax cut.
Yes.
No, I'm sorry, I'm not up on that yet.
That's a question that I've got too. I'm going to hate the day that someone starts asking me questions about that, thinking that I'm going to be the expert, and I don't know if it's going to work or not. So I make things up.
Right now, I'm dealing with the fact that in the state of Washington has required all employers to provide employees with mandatory sick pay at the rate of at least 1 hour per 40 hours worked, and that's a difficult accrual, and so all employers in the state of Washington right now in January are scrambling to make sure that their payroll software is performing those accruals properly. And I've just discovered that the folks at Intuit are not quite sure how to handle their own software to do that. I went on a chat session with an Intuit help folks and to get some guidance on getting it right, and they gave me the wrong answers. And then the client and I figured out how to get it right. So that's where I'm focused right now as far as taxes are concerned. We got a unique situation here in the state of Washington that is urgent. But you can be sure that in the next few months, as the dust settles, I'll be coming up with answers to those kinds of questions.
Hey Chris.
Yeah.
There might be some people here who are wondering what number 3 is, Sergeant Major Syndrome. Now, I know what that is. I know what a Sergeant Major is. But maybe some people in the audience here, they don't really realize what that is, and they get Sergeant Major and they don't even know it.
Yeah. So, Sergeant Major Syndrome is putting everybody else first and not taking care of yourself. It's putting yourself last. You know, the way Randy and I understand it is in the chow hall. The way it works is that leaders eat last, and so the very last person in the chow hall to eat in the enlisted chow hall is the sergeant major. You know, the privates go first, and then the lance corporals, and the corporals, and on up, and the sergeant major is the last to eat. But that's within a military context. You know, a lot of people, go to church and profess Christianity of one sort or another. So I put this Bible verse here, John 15:13, where it talks about how the greatest love is, in so many words, to die for others, and that is a really impactful doctrine. It's very true, it's very valuable, and it's very influential. And I find that the best employers I've ever met have a soul. and they care deeply about everybody, and so they will actually not pay themselves. They will actually suffer a loss. They will actually put a second mortgage on their house in order to keep their business going so that they can continue providing jobs to people. And uh, that that is obviously not sustainable. Um, but it happens all the time. Or another thing I'll see employers do is they will pay their employees more than they pay themselves. And we hear a lot in the with the Occupy movement about how corporations are evil and most of the wealth most of the wealth in the hands of an elite few. Um, but you know what? Um, I've discovered uh, 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 look on the whole, looking at businesses, and is that I've seen business owners, whether regardless what the form of the business is, whether it's a corporation, a C corp, S corp, LLC, sole proprietorship, whatever. These are caring people with souls who are accustomed to deferring gratification and taking care of their people. They take care of their employees first. They take care of their customers first, and they view. And let's face it, profit is a residual idea, um, and and, uh, and so they view their own myself after I've taken care of everybody else. But I compare it to the goose that lays the golden egg, or the ox, the threshing ox. A business owner is a goose that lays golden eggs. A great example of that is a real estate development company. We call real estate because we think it's real. It's tangible. It sticks, bricks, dirt. It lasts. People view it as a secure investment. Well, how does real estate happen? Well, developers build it. Well, what about the developer? Well, I've discovered that developers are to their projects as the goose is to the golden eggs. And a lot of people, after a building is built, a lot of people make money off of that building. The realtors will make money off the building over and over and over again every time it changes hands. Um, Owners will make money off of it if they turn it into a rental property. It becomes an income property for them. But what about the person who built it in the first place? Did they make any money on that? Maybe, maybe not. But whether they made money or not, they created a golden egg for somebody else. So one of the things that I'm involved in, besides property management companies, helping property management companies like Randy's right now, is helping developers take care of themselves, because we're in a point in our country's history where there's an affordable housing shortage. We have massive homelessness in major cities all around the country, and we have aging infrastructure. So what we really need is builders and developers to build more affordable housing, figure out a way to build affordable housing and then build it, and also a way to rebuild or replace our aging infrastructure. So we need to figure out a way to reward the people who have the developers and the builders, the people who have the knowledge and skills to do that. And I'm finding there's a huge gap in what I would call uh, well, I'm researching best practices in finance to make sure that the goose that lays the golden eggs is properly fed, so that they don't run into the problem like that local case I gave you, where the developer built this wonderful development. He lost tens of millions of dollars. He betrayed a lot of people. He felt so ashamed of himself that he tried to commit suicide. Let's not be that guy. Let's figure out a way to feed the goose that lays the golden eggs. So in the case of a property management company owner, it's the same thing. You're juggling so many relationships with your landlords, with your tenants, with your employees, that it's easy to forget that you need to feed yourself too.
Chris,
Yep.
can you begin closing on how important it is for a budget in business?
Well, yeah. So let's see here. Randy and I are working together right now. I have the greatest respect for Gary Keller. Gary Keller is a gem of a man, and Gary Keller is not. I mean, he's the head of a real estate outfit that has really been disruptive in the industry. They dominate. They sell the most houses. They make the most money. But Gary Keller is not about the money. He's a sweet guy. At heart, he's a teacher and a writer. And he has written a couple of really ground-shaking books that I highly recommend. In fact, let's see if I come over. I've written extensive reviews and summaries of both books. One is A Millionaire Real Estate Agent, and the other is A Millionaire Real Estate Investor. And in the Millionaire Real Estate Agent, on pages 250 through 252, Gary gives the best advice I've ever seen on cost control. And he comes up with a brilliant technique for monitoring a budget, which I've never seen anywhere else. I think a lot of people avoid budgets because it's just so tedious, and they don't want to be bothered with all that tedium. Well, as a real estate guy with the scoring high I on that disc profile himself, he's figured out a way to do it without subjecting to yourself a lot of the kind of tedium that, say, accounting types actually in a sick way enjoy, kind of like working with a puzzle or something. But the value of the budget is to make sure the goose gets paid, to make sure the goose gets fed. That's it in a nutshell. That you want to control your costs in such a way that you are showing an adequate profit to feed yourself. And profit is not a four-letter word. Profit is to business owners as wages are to employees, as rents are to landlords, and as interest is to lenders. It's a price. Okay. When I took Economics 101 way back when, we learned there are four factors of production in the economy: land, labor, capital, and entrepreneurship. The price of land is rent, the price of labor is wages, the price of capital is interest, and the price of entrepreneurship is profit. And it's just as necessary and legitimate as any other price. If the business owner doesn't get profit, that's like starving the goose that lays the golden eggs. So the purpose of the budget, in a nutshell, is to make sure the goose gets fed. And the best way to do budgeting I've ever seen, and that Randy and I are actively working on this year at deploying at Property Management Advisors, may be found in Gary Keller's book, Millionaire Real Estate Agent, pages 250 through 252 on cost control. So I encourage you to get that book and read it. And I have a page on my website where I've reviewed the book, and I have a 12-page kind of cliff notes, a single-space typewritten hyperlinked outline of the book.
Chris?
Yeah.
Thank you very much. You showed me what a budget really was, even though I had a head knowledge of what a budget is, but now I have that internalized, and that's when we talk weekly, between Chris and I, we talk weekly about the strategy of where it's going and where we've been. And it's like a true north compass reading here. And the budget is the thing that he asks me about every single week.
Yeah. Well, you got my email yesterday?
Yes.
Yeah. So may I tell the folks what I sent you?
Yeah.
You
have about 40 seconds.
Okay.
So make it fast.
Well, okay. So today's January the 10th, and Randy's book. Randy has coherent accounting records for his own company. His bank account is reconciled to the penny, and I was able to send him his own T12 for his own business yesterday, 9 days after the fact. So he's got a complete view of how he did in 2017, month by month. And I said, I encourage you to look this over and manage your January revenues judiciously in light of this current information. And very soon we'll be taking this and making it into a 2018. And really, I like to do budgets 3 years out, 2018 through 2020 budget. So thanks very much, you guys. My contact information is on this outline, and I hope that we'll be emailing it to all of you so that you can take advantage of the hyperlinks and follow up. Have a good day.
Thanks very much. We really appreciate your time and your expertise, and thanks for agreeing to do this for me and the rest of the group.
Okay. I hope to see you guys all in person soon.
Thank you.
Have a great afternoon.
All right, folks, there you have it.